This stock has the potential to make you rich next month. Opportunities like this don't come often. Every once in a while, a stock emerges with all the right ingredients: explosive growth, strong fundamentals, and a market shift that creates the perfect setup for massive gains. Most investors only realize it after the fact, but those who recognize the signs early can position themselves for life-changing returns. Right now, there's one company that's showing all the signs of a major breakout, and smart money is starting to take notice. HIMS and HERS has been making serious waves in the stock market, and the opportunity here could be massive. This is not just another telehealth company. It's a high-growth business that has already proven its ability to dominate a rapidly expanding industry. But is this the breakout moment investors have been waiting for, or are we looking at a false alarm? Let's break down everything you need to know before making a move. Before we get into the details, take a second to subscribe if you want to stay ahead of market trends and uncover game-changing investment opportunities before they take off. HIMS and HERS is proving it's not just a hype-driven stock, it has the numbers to back up the excitement. In fourth quarter 2024, the company reported earnings of 11 cents per share on $481 million in revenue, showcasing impressive year-over-year growth. Even more striking, for the full year 2024, HIMS and HERS generated $1.48 billion in revenue with 53 cents per share in earnings. Looking ahead, the company is forecasting 2025 revenues between $2.3 billion and $2.4 billion, with adjusted EBITDA projections ranging from $270 million to $320 million. That's not just growth. It's a sign that this company is scaling at an extraordinary rate. Investors who get in at the right moment could be looking at serious upside potential. Beyond the revenue figures, what really stands out is the company's ability to increase its customer base while maintaining high margins. The telehealth model thrives on repeat customers, and HIMS and HERS has mastered the art of customer retention. By focusing on subscription-based services, it ensures a steady stream of recurring revenue, which is crucial for sustainable growth. Recent regulatory shifts have introduced a major curveball. The FDA removed semaglutide, the active ingredient in Ozempic, from its shortage list, forcing compounding pharmacies to halt production of alternative versions. Since Ozempic-related treatments were a key revenue driver for HIMS and HERS, this change sent shockwaves through the stock, triggering a significant sell-off. The real question is, how does HIMS and HERS respond? The company has already taken steps to ensure that its core business remains strong. Rather than relying on a single product for growth, it has been investing in expanding its range of personalized healthcare solutions. This means rolling out new services that cater to customer needs beyond just weight loss treatments. Investors should pay close attention to how HIMS and HERS diversifies its offerings in the coming months. In the wake of the FDA's announcement, HIMS and HERS stock plunged 27% on February 25, 2025. Panic selling hit hard, but seasoned investors know that moments like this often present buying opportunities. Whenever a high-growth company faces a regulatory shift, the initial reaction is typically overblown. But here's the key factor to watch. Can HIMS and HERS pivot effectively to offset lost revenue? If so, this drop could be a massive entry point for investors looking to capitalize on short-term volatility and long-term growth potential. Beyond the price drop, institutional investors have also been paying close attention. Some major hedge funds have increased their positions in HIMS and HERS following the dip, signaling confidence that the company can adapt and bounce back stronger. This could be a strong indicator that the market overreacted and that smart money sees this as an opportunity rather than a red flag. With these massive changes at play, the next move is crucial. How is HIMS and HERS positioning itself to come out stronger, and what does this mean for investors who want to maximize their gains? Let's break it down. Just a quick shout out to our sponsor, Moomoo Financial. If you're looking to start investing or expand your portfolio, Moomoo has an incredible offer just for you. When you open a brokerage account using the link in the description and deposit as little as $1, you'll get a chance to draw a free stock, and that stock could be worth up to $2,000. But that's just the beginning. If you make a net deposit of $100 or more, Moomoo will reward you with 5 free stocks, each potentially valued at up to $2,000. That's a huge opportunity to kickstart your investing journey with minimal effort. And if you're ready to go all in, depositing $1,000 or more unlocks an even bigger reward: 15 free stocks. That means you could be looking at a total value of up to $30,000 in free stocks just by getting started. This is one of the best deals out there for new investors, and it's a great way to explore the stock market with zero commission trading, advanced tools, and a user-friendly platform. So, don't miss out. Click the link in the description, sign up, and grab those free stocks while this offer lasts. Now, let's jump right back into the video. HIMS and HERS isn't standing still. The company is already working on a strategic shift to personalized treatments, diversified telehealth services, and a stronger direct-to-consumer model. The goal: make up for lost revenue and continue scaling without relying solely on Ozempic-related sales. Additionally, the company recently acquired a US-based peptide facility, which will allow it to develop new treatments in-house rather than depending on external suppliers. If successful, this could be a game changer, giving HIMS and HERS full control over its product pipeline and margins. Another key move the company is making is expanding its mental health services. With a growing demand for telehealth-based therapy and wellness services, HIMS and HERS is positioning itself to be a one-stop shop for a variety of healthcare needs. This diversification could help it stabilize revenue streams and reduce dependence on any single product line. The telehealth space is heating up, but HIMS and HERS has a unique edge. Unlike traditional healthcare providers, it operates in a direct-to-consumer model that eliminates middlemen and drives higher profit margins. Plus, the company is aggressively expanding into new health categories, giving it a wider audience and a stronger foundation for long-term growth. Other major players are scrambling to keep up, but HIMS and HERS already has brand recognition, customer loyalty, and a proven track record of scaling quickly. If it executes its pivot successfully, the stock could rebound faster than expected. HIMS and HERS is also investing heavily in AI-driven diagnostics and automation, which could allow it to serve more patients while lowering operational costs. This level of innovation gives it a significant edge over competitors that are still reliant on outdated healthcare models. Let's look at the big picture. HIMS and HERS is in a prime position for significant growth. Revenue is on track to double in the coming year, solidifying its foothold in a rapidly expanding industry. While the recent FDA regulatory changes initially caused a knee-jerk reaction in the stock price, the company is already adapting and making strategic moves to maintain momentum. With the stock currently trading at a discount following a sharp drop, this could present an opportunity for investors looking to enter before the company regains its upward trajectory. The biggest risks: execution. If HIMS and HERS fails to pivot effectively, the stock could remain volatile. However, for investors with a long-term mindset, the reward could far outweigh the risk. HIMS and HERS is facing a critical moment. With major regulatory shifts, rapid revenue growth, and a high-risk, high-reward setup, this stock could be one of the biggest investment opportunities of the year. But is now the time to buy, or is there more volatility ahead? Drop your thoughts in the comments. Do you see HIMS rebounding, or are you waiting for more clarity? Let's discuss. And if you haven't already, subscribe and like for real-time stock insights and deep dive analyses on high-growth opportunities.